Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, February 12th, 2009. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. Two birthdays of note today. They both occurred 200 years ago on February 12th, 1809. Charles Darwin, the founder of evolutionary theory, was born in England. On the same day in LaRue County, Kentucky, Abraham Lincoln was born, the 16th President of the United States. It's not believed that the men met each other during their lives. We have some breaking news today. It's coming from England and it concerns American International Group. AIG has revealed that the UK business operations of its AIG Financial Products Division is being investigated by the UK's Serious Fraud Office. AIG has said that it will cooperate fully with the inquiry. AIG understands that the Serious Fraud Office's inquiry is not related to AIG's foreign or domestic insurance business. AIG, of course, began the process of unwinding certain of AIG financial products and its subsidiary businesses last year. There are approximately 370 employees still working for AIG financial products as the business is being wound down. That, of course, is the business that was responsible for all of the derivative swaps on the credit default swaps. Now to our main news, and of course the main news today has to do with Swiss Re, and it has to do with Jacques Aigram. Jacques Aigram has resigned this morning as CEO of Swiss Re just a few days after Swiss Re announced the full year 2008 loss and a series of measures to shore up its balance sheet. Aigram, who came from J.P. Morgan, and was widely credited as the driving force behind the growth of Swiss Re's capital market business, which of course led to heavy write-downs, is being replaced by his deputy Stefan Lipp. Lipp was promoted to deputy CEO and COO last summer in a management reshuffle. More on Lipp later. In a statement explaining his resignation this morning, Aigram said, quote, having taken measures to reinforce the group's capital strength, that would be translated Warren Buffett, and further de-risk its investment portfolio, the interests of Swiss Re are now best served by a change in executive leadership. He said that Mr. Lipp was an architect of Swiss Re's, quote, focus on disciplined quality underwriting. Now news on Lipp. Lipp himself is a mathematics graduate and long-serving executive who's been credited with transforming Swiss Re's approach to underwriting. The 53-year-old Lipp transformed the company's approach to underwriting during his tenure as head of reinsurance products. Swiss Re insiders credit him with steering the superior performance of the business and believe that this contribution led to his elevation as deputy CEO last September. Lipp is a German citizen. He has 25 years of experience in reinsurance. He graduated in mathematics with business administration from the University of Mannheim. He has a PhD, which he obtained in 1982. In his role as head of reinsurance products at Swiss Re, Lipp was credited with transforming Swiss Re's approach to underwriting. Lipp assumed the role of deputy CEO in September of 2008. He was also appointed chief operating officer. As deputy CEO, he took control of an extended area of activities, including global IT, group technical accounting, claims and liability management, group legal, group logistics, as well as product development and strategy. Lipp speaks. Lipp says that he's going to be taking a much more traditional approach to underwriting. Some of the analysts are saying that Lipp's appointment is in line with the lower risk back to basics approach that was outlined last week. We expect Mr. Lipp's presentation at next week's results meeting to reinforce this strategic shift. Analysts are saying the fact that they're bringing in an insurance man who can start cleaning up the company is really big, bold news. This fellow, whose name is Fabrizio Croce, who is with Kepler Capital Markets, said we can see light at the end of the tunnel, even if it's a long way off. Keep in mind that on February 18th, Swiss Re is going to finally announce its complete numbers for 2008. There are some rumblings now with the Swiss Re Board of Directors that they're in process of reviewing the overall strategy of the company. Some sources have indicated that board member changes are possible, but none of these will happen until the 19th, when the fourth quarter earnings are put out. There have been some voices of discontent with the board concerning Chairman Peter Forstmoser as well as Vice Chairman Walter Kielholz. So it looks as if the 19th of February will be a very busy day at the Red Castle in Zurich. Congratulations to Mr. Lipp. The front page story today in the Insurance Day coming from Aon Benfield. Andrew Appel, who's the CEO of Aon Benfield, says that the majority of job cuts resulting from the Aon acquisition of Benfield will in fact occur by the middle of this year. Appel told Insurance Day that the company will cut between 500 and 700 people, and that it's been a leadership decision to do that quickly and get these overlaps behind us. He said that Aon Benfield has started to have conversations with staff and that some changes in the support area have already occurred. He said, however, that for the operations and technology divisions, it will take, quote, a couple of years to finalize those cuts. He said that the continuing amalgamation of Aon and Benfield portfolios into one entity is another issue that needs to be completed as swiftly as possible. He did say that one of the issues facing Aon this year was to find adequate supplies of capital to meet its clients' needs. Some other news, Catlin has become the latest Lloyd's reinsurer to unveil capital raising plans, this with a heavily discounted £200 million underwritten rights issue that J.P. Morgan is underwriting. The company said that the rights share, which is priced at 205 pence, which is a 47% discount to yesterday's trading price, will leave it, quote, well-positioned financially to exploit market conditions. This means that they see a hardening market coming. Catlin said it will also allow it to take greater advantage of its distribution network to increase on a selected basis its risk appetite in high margin areas and to acquire underwriting teams. Catlin announced a $13 million pre-tax loss and a net loss to shareholders of $46 million for 2008 compared to profits of $462 million last year. The loss was driven by a negative investment return of 1.5% for the year that included a net loss on fixed income investments of a little over $111 million. And of course, they increased their loss estimate from Hurricane Ike, the storm that won't go away, by 25%. In some other news, QBE European today confirmed the Insurance Post exclusive that QBE has acquired the renewal rights to the portfolio of industrial and commercial property business, which had been underwritten by Endurance Specialty Holdings, currently being written out of the London market. The Endurance portfolio is mainly UK business. It generates about £30 million of gross written premium income in 2007. Under the move, the 30-person strong London Endurance Insurance Risk Practice Team will relocate to QBE's Plantation Place offices, adding to the QBE team of experts. And here's some sort of ominous news that came out this morning. It's not received too terribly much play, but you'll wonder why in a second. Willis, the broker, has said that it has refinanced its current loan and has suspended its future forecasts. The U.S. broking giant, which is news to me, I always thought it was headquartered in London, has said that it has entered into an agreement pursuant to which Goldman Sachs will provide Willis with $500 million of long-term debt financing through the purchase of notes, unsecured senior notes due in 2016, that pay this interest rate, 12.875%. The net proceeds of the financing will be used to repay a substantial portion of the Willis existing interim credit facility. Willis added that its suspension of providing annual earnings guidance is because we can't predict the potential impact of the uncertainty of the global economy. Willis said that fourth quarter net income shrunk to $65 million from $95 million last year, while full-year net income dripped 25% down to $303 million from $409 million. The results for the year ending 12/31/08 were significantly impacted by pre-tax charges totaling $92 million for the 2008 expense review, including HRH integration costs and foreign currency translation. Willis also revealed that it had eliminated 350 jobs during 2008. We have a word from our sponsors. The stock market is down about 150 points. Come back with the rest of the news.